Welcome to the Deep Dive, your direct route to understanding complex topics quickly and thoroughly. Today, we're launching into the burgeoning commercial space industry. Specifically, we want to unpack the investment landscape of a company that's really, truly at the cutting edge, Intuitive Machines, Inc., ticker LUNR.
That's right. Our deep dive today, it's based on a pretty comprehensive stack of analyst reports, recent financial disclosures, and some critical market insights, all centered around Intuitive Machines. Our mission, really, for you, the listener, is to pull out the most vital nuggets of knowledge, help you make truly informed investment decisions in what is, let's face it, a high potential but also high risk sector.
Yeah, definitely high risk, high reward. And we're talking about a company making headlines, right? Not just for what they plan to do, but for what they've actually done. So let's start at the beginning. Who exactly is Intuitive Machines, Inc., and what makes them a company we need to be watching right now?
Okay, so Intuitive Machines. They were set up in Houston, Texas back in 2013. They're a leading American commercial space company. Their core focus, their bread and butter, is lunar exploration and services. Basically, think of them as the go-to provider for getting to the moon's surface and eventually setting up shop there.
Okay, lunar exploration and services. What does that actually mean in practice? Like, what are their key offerings?
Right, so they offer essentially a full suite of services for lunar missions. This includes lunar payload delivery, so getting satellites, scientific instruments, maybe even cargo safely onto the moon. And then once you're on the moon, they handle data transmission and processing. And maybe most critically for the future, they're getting involved in space infrastructure services, laying the groundwork for what could become a vibrant lunar economy someday. They operate mainly in the aerospace and defense and capital goods sectors. And they are growing. They had around 435 employees late last year, expected to hit maybe 450 by mid-2025.
Got it. Now, when people talk about Intuitive Machines, that Nova C lunar lander always comes up. What makes that specific lander and its recent mission such a huge deal for the company?
Yeah, the Nova Sea, look, this wasn't just a mission success. It was a commercial validation that kind of changes everything for Eleanor. First off, Intuitive Machines was one of only 9 companies picked for NASA's Commercial Lunar Payload Services program, the CLPS program. That's a massive vote of confidence right there.
Yeah.
But the moment that really launched them from just promising to genuinely pioneering was their successful lunar landing back in February 2024. They became the first commercial entity ever to land and operate on the lunar surface. In an industry where trust, precision, proven capability, it's all paramount. Being the first, that positions them not just as a leader, but maybe as the standard bearer for future NASA contracts, private ventures too.
Wow.
That's a huge competitive moat they just built for themselves.
That is an incredible achievement. Definitely a huge long-term positive. But, for investors, the immediate question is always, okay, great, but what have they done lately? Let's dive into their recent financials and the news that's actually moving the needle for LUNR right now.
Yeah, absolutely. And it's vital here to remember LUNR is a growth stage company. That means profitability, not the immediate focus. Reinvestment for expansion is. So looking at their recent Q1 2025 results, the quarter ending March 31st, their revenue came in at $62.52 million.
Okay.
Now, unfortunately, that missed analyst estimates. They were hoping for around $66 million. And it's actually down about 14.6% from the previous quarter.
Ouch.
Yeah, and in fact, their Q4 2024 also missed expectations. So while that long-term growth story is compelling, these recent revenue misses, they're critical short-term indicators. They sort of tell us that execution on existing contracts might be a bit lumpy, And investor sentiment will likely stay volatile until LUNR shows more consistent top-line performance. It's that classic tension, right? Long-term vision versus short-term operational reality.
So, okay, some quarterly misses there. But does that tell the whole story about their revenue growth? I mean, is it all bad news on that front?
No, not at all. Not at all. When you zoom out a bit, the growth narrative is, well, it's pretty undeniable. Their trailing 12 months revenue, the TTM figure, is $217.31 million. That's a substantial 61.5% increase year over year.
Okay, that's significant.
It is. And their full annual revenue for 2024, that hit $228 million. That's
Okay.
Analysts are projecting continued per-share losses for the next year. The estimate for 2025 is around -0 long cents per share. Now, this is pretty typical for a capital-intensive growth company like this. Their free cash flow, or FCF, is negative almost 17.2%. That shows they're pouring cash back into the business, into expansion, rather than generating it right now.
Okay, typical for growth, but still something investors need to watch. Beyond these financial numbers, what other significant news has been impacting the stock lately? Any disclosures or events we should know about?
Yeah, there are a few key things. Their Q110Q report that was submitted July 23rd, 2025, that confirmed those revenue and EPS misses we talked about. News like that, it often triggers, short-term negative sentiment. Then, around July 25th and 28th, we saw some Form 144 filings. Those are for insider stock sales.
Ah, okay. Always raises eyebrows.
It does. Now, you always need to consider the context of insider sales. The scale, the frequency, individual reasons maybe. But generally, the market interprets them as a negative signal. And they can definitely contribute to short-term concern and stock price instability.
Right. Those are definitely clear short-term headwinds then. So what's the counter narrative? Is there anything positive providing a tailwind for LUNR right now to balance that out?
Absolutely. The biggest positive, by far, is their continued success with those NASA CLPS contracts.
Right, the core business.
Exactly. LUNR recently secured another one, an additional $116.9 million lunar contract.
Yeah.
This isn't just a win. It's really a testament to their proven technology, their reliability. It provides a stable, foundational revenue stream and clear growth momentum. So despite some of those recent financial misses and the insider sales, the core business of securing these high-value NASA contracts remains incredibly strong, and that's absolutely fundamental to their long-term outlook. And analysts, reflecting this, generally maintain a buy rating. Target prices around $15 from firms like TOS Securities, for example.
Got it. So the core NASA relationship is solid. Let's zoom out a bit now. How does Intuitive Machines fit into the bigger picture, the broader commercial space industry? And who are they really competing against in this rapidly evolving market?
Yeah, the bigger picture, the commercial space industry is it's in an explosive growth phase. We're talking everything from satellite internet becoming ubiquitous, space tourism starting to take off, to really ambitious lunar and Mars exploration plans, and even eventually resource mining in space. This whole environment creates immense market opportunities for companies like LUNR, particularly with this global surge of interest in lunar exploration and using lunar resources that ties directly into their core business.
And how significant is government policy and funding in this sector? You mentioned NASA, obviously.
It's absolutely critical. NASA's CLPS program isn't just a revenue source for LUNR. Right now, it's their main revenue source. So increased NASA budgets or expansions of programs like CLPS, huge positives. Any cuts, that would pose a direct threat. There's also just the relentless pace of technological advancement you have to consider. Think reusable rockets, microsatellites, AI being used in space operations. LUNR has to innovate constantly just to maintain its competitive edge.
So it sounds like a booming market, but also one that's attracting some very serious, well-funded players, right, who are LUNR's main competitors.
Yeah, it's a fierce landscape, no doubt. Directly competing for those lunar contracts, you've got Astrobotic Technology. They're another CLPS awardee. Yeah. Though, importantly, they had that very public Peregrine lander failure back in January 2024, which actually, kind of highlights LUNR's success by contrast. Then there's Rocket Lab, ticker RKLB. They're a leader in small launch vehicles, also getting into satellite manufacturing, developing bigger rockets too. And then on a much larger scale, you have the private giants, SpaceX, of course. Utterly dominant in launch services with Falcon, Starship coming online. Plus their Starlink satellite internet is generating significant cash flow, which gives them huge resources. And Blue Origin, backed by Jeff Bezos, developing large reusable rockets, lunar landers as well. Big ambitions there.
Okay, those are some heavyweights.
Yeah.
Given that competition, what's Intuitive Machines' unique competitive advantage? What allows them to stand out, especially against a SpaceX or a Blue Origin?
LUNR's specific edge right now is their proven success in commercial lunar landing and payload transport. That 2024 moon landing, it isn't just a feather in their cap, it's powerful, tangible validation of their tech and their reliability. Exactly. Especially when you contrast it with Astrobotic's failure. It gives them a distinct advantage in that specific niche. However, their Achilles heel, you could say, is that they lack in-house launch capabilities. They rely on partners like SpaceX for launch.
Right. Dependent.
Yeah. And this means those larger players, the ones with vast capital and vertically integrated infrastructure like SpaceX and Blue Origin, they could certainly increase the long-term pressure. That's a definite risk.
Okay, makes sense. We've covered the company, its immediate industry. Let's pull back even further now. How do big global economic trends impact a capital-intensive growth company like Intuitive Machines?
Well, generally speaking, global economic growth is a tailwind. Strong growth usually means more corporate investment, more government spending. That often translates to higher space exploration budgets, more private capital flowing into the sector. Good for LUNR.
And what about the flip side? Inflation and interest rates. Those have been major headlines recently. How do they affect a company like LUNR?
Oh, they're absolutely crucial. Current inflationary pressures mean central banks, like the Fed here in the U.S., might keep interest rates elevated for longer. For LUNR, this has direct consequences. High interest rates increase their borrowing costs. That puts a burden on their finances, especially as they need capital to grow. It also, technically, lowers the present value of their future cash flows, making those long-term projects look a bit less attractive in the short run, at least on paper.
Okay.
And furthermore, inflation itself drives up operating costs. Raw materials, highly skilled labor, which squeezes their already tight profitability. Beyond that, government fiscal policy is just paramount. Remember, the U.S. government's defense and space budgets are directly tied to LUNR's NASA contracts.
Right.
So if there are tightened budgets down the road due to fiscal deficits or shifting priorities, that could directly reduce space funding. That's a risk. And finally, geopolitical risks, international conflicts, supply chain instability. That kind of stuff can dampen investor sentiment generally, and it could restrict international collaborations, potentially affecting the sensitive space tech sector and its complex supply chains.
So it sounds like while the space industry itself has these strong long-term growth drivers, LUNR still faces some very real headwinds from the current economic climate, particularly those high interest rates impacting their financing needs. This naturally brings us to, well, the crucial question for any investor. What are the main risks involved with LUNR? Let's lay them out.
Yeah, the risks are significant, and you absolutely must understand them clearly before considering an investment. First, high operating costs and profitability issues. We touched on this. Space exploration is incredibly capital-intensive. LUNR's current losses and their negative free cash flow mean they need continuous investment. If those losses are prolonged, they'll need further funding. And that potentially leads to stock dilution for existing shareholders as new shares are issued to raise capital.
Right, dilution is always a concern for growth stocks. Beyond the financials, what about the inherent nature of, shooting rockets at the moon?
Exactly. That's the second major risk. Mission failure and technical risks. Developing lunar landers is it's incredibly complex and inherently prone to failure. One tiny component failing, one unexpected solar flare, some weird issue in the unforgiving space environment, and a multi-million-dollar mission could be lost. We've seen it happen many times in space history. LUNR faces that same immense pressure. A mission failure would severely damage their reputation, their perceived reliability, future contract prospects, and critically, their stock price. It's a huge potential blow.
Definitely. What else?
Third, that government contract dependence and policy changes. We keep coming back to it because it's so important. Their high reliance on NASA's CLPS contracts means any budget cuts, policy shift, or changes to that specific program by NASA that would directly threaten LUNR's revenue and growth. It's a concentration risk. Fourth, intense competition. Yes, the market's expanding, but it's also getting crowded with powerful, extremely well-capitalized players like SpaceX, Blue Origin, Rocket Lab, Astrobotic. This can lead to fierce price competition down the line and potential erosion of market share if LUNR can't maintain its edge.
Okay, so dependency competition.
Fifth, tied to the first point, funding risk and share dilution. As a loss-making company needing continuous investment, LUNR needs ongoing access to capital. Issuing new equity, which causes dilution, or taking on more debt, could negatively impact shareholder value and their overall financial health. Sixth, the regulatory and legal environment. Space is a heavily regulated sector. Think national security concerns, international treaties about space use. Unforeseen regulatory changes could impede their operations or significantly increase their costs. And finally, number 7, key personnel dependence. This is a highly specialized industry. The departure of key scientists, engineers, or crucial members of the management team could severely impact their technology development and day-to-day operations. They need those specific brains.
Okay, that's a pretty comprehensive list of risks. High stakes. So with all these risks on the table, how do we evaluate LUNR from an investment metrics standpoint? What numbers should investors be focusing on here?
Right, metrics. And remember, LUNR is a growth stock, so traditional value metrics like the price-to-earnings ratio, PER, not really suitable because, well, they have negative earnings.
Right, it doesn't apply.
Exactly. So instead, we look at other indicators. Their market cap is currently around $1.286 billion as of late June 2025. Interestingly, simply WallSaint estimates their intrinsic market cap, their potential value based on future cash flows, at closer to $1.96 billion. That suggests potential upside if they execute well. Their return on equity, ROE, over the trailing 12 months was reported at 42.57% in July 2025. And this is but this number is highly volatile. It was about 28% in 2024, and it
Right.
was negative 27% in 2023.
Wow, yeah, all over the place.
Right. So you absolutely have to scrutinize its sustainability and not just look at that one number in isolation. A more relevant metric, often used for growth stocks, is the price-to-sales ratio, or PSR. That stands at 4.66 as of July 2025. And one positive sign on the balance sheet, their current ratio is 4.39. That suggests good short-term liquidity, which is definitely crucial for a growth company burning cash.
Okay, helpful context on the metrics. And for investors who follow technical analysis, the charts, what do they tell us about LUNR's stock trend right now?
The technicals. From that perspective, especially after their big February 2024 moon landing success, the stock saw a huge surge, as you'd expect.
Hmm.
However, since then, it's definitely experienced increased volatility. That's likely due to profit-taking after the run-up, plus those recent financial results and the insider sales we discussed. So right now, it's likely under short-term downward pressure and probably in a correction phase. Looking at typical indicators, well, if short-term moving averages cross below long-term ones, what traders call a death cross, that would signal further weakness. Increased trading volume on days the price drops also generally indicates selling pressure. You'd also keep an eye on indicators like the RSI, the Relative Strength Index, for overbought or oversold levels, and the Mankey-D moving average divergence, for trend momentum signals. So the overall technical conclusion, I'd say, is that a short-term correction seems likely due to the recent negative news flow. Technical indicators might be suggesting selling pressure. However, the long-term trend, that's going to heavily depend on the broader commercial space industry's growth and, crucially, LUNR's own execution on contracts and missions. Investors should definitely watch for key support levels for potential entry points if they believe in the long-term story.
Okay, so on one hand, we have these clear risks, volatile metrics, maybe some short-term technical weakness. But what are LUNR's internal strengths? What might counterbalance these factors and give investors some confidence?
Yeah, their core capabilities are indeed significant counterbalances. You have to weigh them. First, their core technology and R&D. They possess proprietary Nova-C lunar lander technology. And crucially, their precision landing and surface operation capabilities. They're now fully validated by that successful NASA CLPS mission. That is powerful proof of their technical prowess. It's not theoretical anymore. Second, their management and personnel. They really do boast experienced management, highly skilled engineers, and scientists. A lot of them have deep backgrounds from NASA, which undoubtedly helps with government cooperation in winning those vital contracts. And third, their partnerships and network. That strong ongoing partnership with NASA is arguably their single biggest asset right now. It provides stable contracts, opportunities for technology exchange, and a real competitive advantage.
Okay, so we've really dissected Intuitive Machines from, well, pretty much every angle: the company itself, its industry, the macroeconomics, the risks, and the strengths. What does all this mean for you, the investor, trying to decide if LUNR actually fits into your portfolio?
Right, putting it all together. From a holistic view, LUNR really has to be framed as a high-risk, high-reward investment. No question about it. The high-reward potential. It comes from the absolutely explosive growth potential of the commercial space industry. LUNR has demonstrated leading technology in its niche, that robust NASA partnership, and the massive long-term potential for, a future lunar economy, resource utilization.
The dream.
The dream, exactly. But those high-risk factors are equally important and very real. They're still a loss-making, early-stage growth company. High interest rates directly impact their funding needs. There's inherent mission failure risk, which is huge. Intense competition is only growing. And there's ongoing regulatory uncertainty. So for an investment approach, LUNR is probably most suitable for long-term growth investors. These are individuals who can look beyond the short-term price swings, the quarterly misses, and really focus on the company's technological advancements and the overall market expansion over years, maybe decades.
Patience required.
Absolutely. And diversification is essential. I can't stress that enough for high-risk growth stocks like this. LUNR should only be a carefully considered, proportional part of a broader, well-diversified portfolio. Don't bet the farm on it. And finally, continuous monitoring is just crucial. You have to keep a close eye on the rapidly changing space industry developments, on LUNR's specific mission progress, especially any future lunar mission successes or failures. New contract wins are key, signs of financial improvement, and keep track of those broader macro trends like interest rates too.
Wow. Okay, this deep dive into Intuitive Machines, LUNR, it really paints a picture, doesn't it? A company right at the very cutting edge of a potentially massive new industry. We've definitely seen the incredible potential lure of that lunar economy, but also the very real, very significant risks that come with innovation at this scale.
Yeah, what's really fascinating here, I think, is that dual nature of LEOR. On one hand, they're a proven leader in a critical niche commercial lunar landing. They did it first. Yet on the other hand, they're still navigating those really complex financial realities of being a high capital early stage growth company, still losing money. And this raises a really important question for you, the investor listening right now. Are you prepared to embrace that inherent volatility, the ups and downs, for the potential long-term rewards of this burgeoning lunar economy? It's not for everyone.
That's the key question. And remember, understanding these different layers, the micro, the meso, the macro forces all interacting, that's really key to making informed decisions in today's complex markets, especially in a sector like this. We really hope this deep dive has given you a clearer lens on intuitive machines and the, well, exciting but definitely challenging world of commercial space investment. If this deep dive was helpful for you, please subscribe.